Hey everyone, welcome back to Corporate Decoder, the place where we dissect the confusing world of corporate filings to bring you the inside scoop. Today we have a juicy one from Fidelity National Financial Inc. or FNF, and let's just say they're giving some of their treasure away. Before we dive in and decode this report, if you are all about getting clear, no-nonsense insights from these documents, make sure you hit that subscribe button. And if you want to connect with other finance and investing enthusiasts, our Discord community is linked in the description below, so come join us. Alright, so what is the big news from FNF? Well, on the 6th of November 2025, the folks in charge at FNF approved something called a special stock distribution. Think of it like the company giving a gift to its shareholders. What kind of gift, you ask? They are handing out about 16 million shares of another company, FNG Annuities and Life, Inc. Now, FNF owns a big chunk of FNG, like more than half, and this distribution is about 12% of all the FNG shares that are out there. So, why are they doing this? Well, the report doesn't spell out the exact strategic reasons, but typically companies do this to unlock value for shareholders. Sometimes a subsidiary like FNG is doing really well, and by spinning off some of its shares, FNF can allow that subsidiary to be valued more independently in the stock market. It can also be a way for FNF to simplify its own business structure. Now, let's get to the nitty-gritty of how you will actually get this gift. The distribution will happen on the 31st of December of 2025. For you to get your share, you need to be a shareholder of FNF on the 17th of December 2025. The company had roughly 271 million of its own shares out there as of the 5th of November 2025. Based on that, FNF is estimating that for every 100 shares of FNF stock you own on that record date, you'll receive about 6 shares of FNG's stock. The final number might be a little different depending on how many FNF shares are outstanding when they officially close the books on the 17th of December. Now, a couple of important details to keep in mind. If you end up owning a fraction of a share of FNG, you will not actually receive that tiny piece. Instead, FNF will pay you cash for that fraction. Also, this distribution is planned to be treated as a taxable dividend for United States federal income tax purposes. This means you might owe taxes on the value of the FNG shares you receive. The good news here is that you, as an FNF shareholder, do not need to do anything, no vote. No special action is required from you to get these FNG shares. If you hold your FNF shares through a broker or some other nominee, the FNG shares will be credited directly to your account by them, and you don't need to pay anything extra or give up your FNF shares to get this. So after the distribution happens, you will get account statements showing that you now own a piece of FNG Annuities and Life. The shares will be in what's called book entry form, which is basically just electronic records. All this information and more details about both FNF and FNG can be found on their respective investor websites. And of course, through the SexOwn website if you want to dive really deep. This announcement about the distribution is filed as Exhibit 1.1 with this report. Essentially, this is the official press release detailing this whole event. And finally, bringing it all together, this report is signed off by Michael L. Gravel, who holds the title of Executive Vice President, General Counsel, and Corporate Secretary at FNF. This signifies the official filing with the Securities and Exchange Commission. Now, let's talk about what this all means on the surface. This looks like a straightforward move by FNF to distribute value to its shareholders. Giving away shares of a subsidiary can be a smart move, especially if that subsidiary is poised for growth or if it allows FNF to focus on its core businesses. The fact that FNG is a majority owned subsidiary suggests it is a significant part of FNF's assets, and a 12% stake being distributed is not trivial. The key here is really understanding the value of FNG. If FNG is a high-growth, profitable company, this distribution is like FNF giving shareholders a piece of that upside directly. However, as investors, we always have to consider the flip side. By distributing these shares, FNF is reducing its ownership in FNG. This means FNF will no longer benefit as much from FNG's future successes. It also means FNF is likely receiving some cash flow or valuing FNG in a way that makes this distribution favorable. Now, we need to keep an eye on how FNF's core business performs without this slice of FNG. Also, the taxable nature of this distribution is important. Shareholders need to be aware that this could create a tax liability for them in the year it occurs. It is not just free money, it has tax implications they should consider. There are no obvious red flags or major risks highlighted in this particular filing about the distribution itself, which is generally a good sign. The company seems to be managing this process smoothly. With clear dates and procedures, one thing to watch is how the market reacts to FNG as a standalone entity after the distribution. Will it be valued higher or lower than it was as part of FNF? And how will FNF itself be perceived by investors without that 12% stake in FNG? The success of this move will ultimately depend on how well FEG performs independently and how FNF continues to drive value in its remaining operations. Alright, that is our breakdown of FNF's latest filing. What do you think about this special stock distribution? Is this a smart move by FNF or are there hidden downsides? Let us know your thoughts in the comments below. If you found this video helpful, please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community found in the description for more discussions and insights. Thanks for watching, and we'll see you in the next video.